All right, guys, I don't know about you, but for me, this has just been one of those weeks. There's just been so much going on, like things needing to be done here, there, and everywhere, not enough time for everything. And finally now at 20 to 7 on a Friday evening, now I get the chance to sit down and talk to you. So here's the deal. This is how the Friday videos are going to work. It's going to be very similar to what we did last year for a certain period of time, where on a Friday, it's more like my chance to be a little bit more informal, let's say, a little bit less structured. And I want to talk about my experiences in trading a bit more and talk about things that I've picked up along the way when I was learning to trade, from my day-to-day trading, and then also from actually teaching people how to trade, like little interesting things I've picked up, my experiences, obstacles I've had to overcome, successes that I've had, things that I think are going to help you out. So I kind of think of these Friday videos as a chance to have a bit of one-to-one time that I can really open up and you can learn a bit more about my journey and the things that I've gone through. And so today I think is quite fitting that I want to talk about something that's probably one of the most frustrating things that we go through in trading. And unfortunately, it's something that doesn't go away no matter how long you've been trading, and it is making mistakes. Like, we're all human, no one's perfect, and it doesn't matter what you're doing, you're going to make mistakes in it at some point if you do it for a long enough amount of time. So obviously with trading, since we commit so much time to what we're doing, then mistakes are going to happen. And obviously you overcome certain mistakes over time, but it doesn't matter if you've been trading 20, 40 years, if you're managing millions, if you're Paul Tudor Jones, Ray Dalio, it doesn't matter, you're going to make mistakes at some point. And the funny thing is, or the ironic thing, is that the more experienced you are and the more money you're managing, when you do finally make those mistakes, that it might happen less frequently, but when you do make one, it's probably going to have a more severe sort of effect. It's going to have big repercussions, or it can do. And so the reason I thought it was quite fitting this week is because I've seen a lot of comments from people kicking themselves for getting things wrong. I think it could be maybe people coming back after Christmas and New Year, maybe got a little bit complacent, they've forgotten how to do things, maybe getting a bit lazy, or maybe the opposite, like getting a bit too enthusiastic and jumping into things and making mistakes that way. And in fact, hands up, I made a mistake this week, just a little one, but it's annoyed me a little bit. But we'll come on to that in a second. So basically the point of this video, I want to talk about how we can overcome mistakes or start to learn from them, my experience of that, and also knowing the difference between a mistake and a bad judgment. And this is really important, that we can determine whether something was poor decision making or a mistake, because the way that you deal with these things to make sure it doesn't happen again is going to be different. Like for a mistake, what you want to do is to have certain sort of triggers in place or safeguards in place, like lines of defense, to make sure that you're not going to make that same mistake. So let's say, for example, that you accidentally forget to put a stop loss in place. Then it's going to be, how can you make sure that you don't forget to do that next time? Like, is it going to be that you have to follow a checklist in a boring way, that you tick things off as you're opening a trade? Was it that you miscalculated something? So it's like you've got to double check your calculations. In a way, like with trying to sort of overcome mistakes or to avoid them happening, then what you end up having to do is make your life a little bit more sort of difficult or tedious, because you're putting more like extra measures in place, extra steps in place that's going to help you avoid making those costly mistakes. But as I said, as you get more experience and you're managing more money, or trading, like your trading capital grows, those mistakes can become more costly, so you need to get in the habit of doing certain things. So for example, like a few years ago, I made a massive mistake, and I've even done a video about it when I lost a big amount of money. I basically went for too many opportunities at the same time because I was really eager and enthusiastic. I'd had a month out of trading and I was seeing all these opportunities coming up. And so when I jumped back into the market, I went for all of them and kind of overexposed myself and took a big loss because of that, because I was seeing, you know, the loss growing, and it sort of had a psychological impact that I just ended up closing everything. And eventually all of these opportunities would have made money. Like if I took one of them individually, it would have been fine. I took them all together, took a big loss on the account. And so since it was only me that made the decisions to open those trades, I felt it was my personal responsibility to report back to the company about, you know, what happened, why it happened, next steps, and so on. So I created this report about the trades, talking through everything, which I definitely recommend to any of you to do. I talk about, you know, writing in your journal. I think it's very important to document everything, the whole process, win, lose, or break even. Make sure that you document everything that you went through, especially if it's like a significant moment. Anyway, I created this report and it was clear that it was a mistake, a bit of a naive, stupid mistake to be opening too many trades because of being too eager and seeing too many opportunities. It was just one of those moments in the market when loads of things have been going on and it was very clear what to do about them. And so we had to think about what to put in place to avoid that mistake happening again. And what we came up with was this super complex spreadsheet where I had to input everything before opening trades and during trades to monitor what I was doing to make sure that the risk was in check. And basically it's telling me yes or no, like can I open this trade? And I can see it very clearly whether it's the right thing to do or not. It's basically an over elaborate version of the calculations I'm doing in my head when I'm trading. And that if you're learning to trade, if you've got a proper control on your risk, what you should be doing as well. Just breaking it down, making it very granular and over the top. But what it was basically doing is instilling this process-driven approach that I really thought of risk as a process, as almost like a checklist, making sure that everything I'm doing is correct and not jumping into things, because that's more similar to gambling, where you see something, you take a flutter. Now obviously I was at the stage where I've been trading for a long time by then, so technically I shouldn't be doing these things, but often you'll find that it's because you've been trading for a while that you can start to get complacent, rely on your instincts a bit too much. And this was just dragging me back from relying on instincts and reminding me that my responsibility is to execute a system. And that way you're not going to make the same mistakes. You're executing the system as you should, and therefore things like this, things like getting a stop loss, things like getting the wrong position size by calculating things wrong, fat finger problems, can happen less and less because you've got a process, you've got a step-by-step plan of what you're doing. And then basically over time, because the spreadsheet did really slow things down, I couldn't just jump into a position because you have to enter in all this stuff, and it makes your day-to-day sort of a little bit more tedious, and you don't want that. You don't want anything that's going to sort of hinder your performance. So over time, as I started to get more, let's call it fluent with putting the things in the spreadsheet, then the spreadsheet wasn't necessary anymore, because in my mind, I'm consciously thinking about these things that I need to do because I was putting them in the spreadsheet. Now it's such a conscious process that I'm not going to make that mistake, because that mistake came from complacency in that process, whereas now it's more step by step. And now it's back to being fluid again. I can jump into a position, I'm making these calculations, but I'm not making those mistakes. But as I said, mistakes do happen, and one happened this week, and it was basically, I executed something incorrectly on a trade, ended up losing more money than I should have done. And it was because I have so many things going on that I wasn't as focused as I would normally be on the trading. I didn't have as much time, screen time to actually be trading properly. And I think that I probably rushed the execution of the trade. And so basically this shows me now that if this keeps happening, if it happens again, I need to make sure that I have something in place that gives me enough time to trade, and I'm, calm enough, and I'm not rushing things. But it happens, it could be a one-off, and you have to really understand that. With your own trading, if you think you've made a mistake, then by all means do something to make sure the mistake doesn't happen again. But if it's just a one-off, it's fine, these things can happen. If it's something that happens again and again and again, then it's very clear you need to put a process in place to avoid that happening, or you need to have something like a checklist or a reminder or whatever it's going to be that's going to help you to avoid that happening. And especially as well, if it's a one-off, but it was a huge one-off, like the time that I was talking about just then, you definitely need to make sure it doesn't happen again, because one too many of those big disasters can be the end of your trading. But on the other hand, we need to make sure that what we're doing is actually a mistake and not just poor decision making, because poor decision making is something else altogether. And what I mean by this is the poor decision making is something that's going against what your system is telling you to do, or you're interpreting something in your system incorrectly. It's not a mistake, you're consciously making that decision, but it's just not in line with what you should be doing. So you could potentially say that when I was opening a lot of positions at once and I shouldn't have been doing it, it's poor decision making. But for me, I think it was just, not keeping my eye on the ball properly, and it was a bit of a mistake there, and you could put something in place to make sure it doesn't happen again. But with poor decision making, it's more along the lines of, if you know you shouldn't be doing something and you can see that you shouldn't be doing something, but you think, no, because of this reason, I'm going to go ahead and do it anyway. And you're not doing it by accident or anything like that, or it's not an oversight, it's a conscious decision, then it's probably something you need to start to integrate in your strategy to make sure that doesn't happen again. And I think everyone has times when they do make the wrong decisions. So if it's a one-off, it's fine. You can have a bad day at the office. You want to make sure you don't as much as possible. But even as a trader, it's going to happen at some point. Like in any job, you're going to have a bad day in the office at some point in your career. And you need to make sure with the decision making though, that if it's something that keeps on happening, then it's something you start to integrate. So it might be, for example, if it's that you keep moving your stop loss, as the price is approaching, you start to feel a little bit no, you know what, I can sort of hold into this position a little bit longer and it's going to come in my favor, and you move your stop loss and it's just leading to bigger losses, that's not a mistake. There's no accident about that. It's not an oversight. It's you're making a bad decision. So you need to make sure that you're picking these up by journaling your trades, by looking in your trading journal, and you can see over time if there's certain trends and things that you're doing, bad decision making, going against things that should be in your system, that, you know, things that are in your system, you're going against it, choosing to do something else, going off on a whim too much rather than sticking to your rules, then these are the things that you need to start to put things in place that clamp down on that. Like, at the end of the day, we need to consider our trading, even as a private trader on your own, as a department. Like I've said before, you need to make sure that there's different functions. And one of those functions in, you know, an institutional setup is going to be someone that's literally looking at your trades like a risk manager and saying, like, what you're doing here is not quite right. Like, can you justify these things that you've been doing? And if not, like, we need to make sure that you can't be making those decisions anymore. So if you think of it like that, if you're very strict on yourself, you can start to overcome these little problems and stop them from becoming big problems. So in summary, let me just break it down for you in a couple of sentences. So first of all, mistakes are still going to happen no matter how experienced you are, but you need to overcome the mistakes and not make them twice. Don't make the same mistake again. But basically, when you have something go wrong with your system, when a trade goes wrong, you need to decide, first of all, was it sticking to your strategy? If yes, no problem. If yes, and you end up losing over time, then you need to rework your strategy and go back to the drawing board then. But if it wasn't part of your strategy, if that shouldn't have happened, was it a mistake? As in, it was just like an accident, fat finger problem, these things happen. In which case, you need to find a way to avoid that happening again. And it's probably going to be something about certain checks and processes. If it wasn't a mistake, was it poor decision making? In which case, is it something that was a one-off, or is it something that keeps on happening? If it's something that keeps on happening, then you need to make sure that something's worked into your strategy to avoid that poor decision making happening again. Anyway, guys, I'm gonna go because it's about 7 o'clock here now. I'm gonna have a beer, I'm gonna enjoy my evening. I hope you have a great weekend. If you like the video, hit the thumbs up. If you've got any questions about anything I said, if you want to know more about my experiences or there's a certain topic that you want me to talk about, then make sure you leave it in the comment section below. And just before I go and let you enjoy your weekend, I just wanted to remind you that I set up a personal channel. It's PURI. If you search on YouTube, you'll find it. I'll also link it below. And that's for if you want to find out more about my experiences or things I'm going through, but on the business side with Duomo, with PURI, and everything else, a bit more about my day-to-day. If you want that, it's not about trading, it's about the business side, then check that out. I'd appreciate if you subscribe there as well. But otherwise, guys, thank you very much for watching. Take care. I'll see you soon.